All right, we should be live. Good evening, everybody. It's TraderX here once again with another midweek live stream, the first one back after quite some time. It's Thursday, the 19th of September 2024. The time is 10 p.m. BST or just after 9 p.m. UTC. If you could all give me a quick audio check in the chat and that you can see my screen. And we shall kick off the stream. All good, yeah? All right. Just a slight delay. I was waiting for the responses, but great. I hope you're all well. As always, good to see the regular faces in the chat. Hello to you all, and hope you're having a fabulous September. No doubt the suspense of the rate cuts has passed us by, and we can get back to business as normal. So a special thank you to Prime XBT for once again partnering with me, and they've been long-term partners and sponsors of my streams over the years, which allows me to share my thoughts and views with you guys, obviously. So, as always, anything said in today's video is not financial advice. As always, it's just my view of the markets and how I'm primarily looking to trade the markets. Before I proceed, I just want to make sure I've slightly configured my microphone that you can all hear me okay. Is it definitely loud and clear and there's no audio issues? I will kick off. All right, so first things first. Do let me know if my voice does distort, because I'm kind of positioned in a weird way with the various screens that I've got up with this new setup. But we're going to start off on the monthly chart. So the first thing that stands out, the first question I have for you guys, are we above the quarter level on this high time frame range? Yes or no? Okay. And one thing I've advocated for is, if you watch the previous stream, that for as long as price remains above the yearly mid-level, I don't really have any concerns that I'm looking for long opportunities in the market. Sentiment was fairly bearish when I was last on stream. I emphasized on the fact that whenever price is at the top end of the range, we see the majority consensus on the timeline calling for 70, 80, 90, or 100K. And then when it's trading at the opposite side, all of a sudden we're in a distribution range and everybody's calling for 30K and lower down. Okay. And I touched upon the fact that there's so much price action left before we can even consider one extreme or the other. Let's just be objective. Let's just take price for what it is and what it tells us and look for good trading opportunities. Now, from a spot perspective, I've just slightly increased my exposure to Bitcoin once we reclaimed back above 54K. So I do hold just some spot exposure, but primarily, I think over the coming weeks, I'm looking to trade Bitcoin. That's just my personal objective. I'm sure there's many of you who are probably holding spot, want to continue to hold spot. That's absolutely fine. My personal preference is I rather trade Bitcoin over the coming weeks, potentially over the coming months, okay? And I'll explain why that is. That's just my objective and how I like to trade Bitcoin. As long as I'm outperforming Bitcoin from a trading perspective, then I'll continue doing that. If I stop outperforming Bitcoin as a benchmark as a trader with my Bitcoin trades, then it probably makes more sense to me to stay exposed to spot and manage my downside risks. Ultimately, looking at the chart, okay, the key thing for me is, like I said, we're above the mid of this range from 44K to the 70K level. Let's go into the weekly. Same again. Okay. We talked about the yearly low, and we also mapped out the yearly high. We'll do that in blue. I'm just going to go very slow on this stream today. We'll probably spend 20 minutes, half an hour max, okay? Very simple objective charts. There's our yearly low, 22nd of January. There's the yearly high, round about the 11th of March. We marked out the mid, which essentially mapped out the yearly mid level. And I specifically stated that for as long as price remains above the yearly mid level, I don't have any real concerns as to, thinking about, bearing in mind, I said thinking about looking to short this level. We've come into a level of support. The only time that I'm going to think about buying lower down is if we find acceptance below 52K or 50K, and we start trading below this demand zone into what appears to be the next logical level of support, which is around about that 38 to 40K level. I also talked about the fact that the 200 weekly moving average is hovering somewhere around here, but that was an adverse scenario. I said if price breaks down, then logically that's probably going to be one of the areas that I certainly will be looking to buy should it break down. Okay, so quite clearly Bitcoin has respected the demand zone that we highlighted. And for me, the point is, look, there was a lot of discussion about comparisons being made. If you recall back in July or August, that Bitcoin is to some extent looking like it's about to make a move similar to what we saw in May 2021. My question for you is very, very simple. It's such that the fact that we are making, or that we have printed a lower high, a lower low, lower high, lower low, lower high, fine. That's okay. But when you truly look at this structure over the last 6 months, is this more akin to a rotational range-bound environment? Or is this akin to a trend down? Now, clearly you can see where is the trend. There really isn't no evident trend to the downside, which consists of momentum, aggressive selling, which causes price to rally low down without any real significant pullback, okay, until it finds the next level of support. We don't seem to be witnessing that in terms of Bitcoin. What we have seen, right, is the fact that price has come in. So this is our yearly mid-level. I'm just going to mark this as in red, sorry. So just to highlight this key demand zone that I've put a lot of emphasis on. And the key thing to note here is that we've had 1 attempt, 2 attempts, 3 attempts into or very close into this demand zone, okay? Yet price every time has traded for a brief period of time below this yearly mid-level and closed back above and pushed up higher. And again, and again. So when you see that on the charts, the next question you want to be asking yourself is, what is price telling you? What is the actual logic for being short biased, knowing that price has just traded below the yearly level, it's tagged a very key pivotal demand zone, and it's found acceptance back above 54K level? Why in that instance are you looking for shorts? So it's clearly evident that 3 failed attempts to find acceptance below the early mid-level, can't even trade into the demand zone in terms of candle closes, just wicks. That should tell you that buyers are stepping in to the market at this level, okay? This is the zone where you want to be, or should have been, looking to buy. Now, for those of you who followed my streams or follow the timelines, I've been very vocal about buying these lows below the yearly mid-level, looking for those reclaims. It's worked every time. We've had a good reaction. We've traded up into the 63K level. Okay, so from a high time frame perspective, as long as we are above 55, 56K level, I don't have any concerns about the downside. I'm continuing to seek long opportunities in the market for what has predominantly been a rotational range-bound environment where there's a market to be traded for both longs and shorts at the edges of the range, okay? Where I don't particularly want to do my business is like I said, is pretty much in the middle of no man's land unless there's a significant pullback, and contextually it makes sense for me to continue looking for longs. In this instance, when you think about the context here, 3 attempts to break below the yearly open, we can't. So therefore, again, any moves lower down, I think if you haven't already positioned or you're looking for long opportunities, you're essentially looking for a move lower down. We'll talk about trade setups slightly ahead in the streams, but I'm just trying to give you the contextual overview of price, okay? Now, if you want to take it another step simpler, when you look at areas of value, Bitcoin has predominantly been trading at that 59K level. If you look at the majority of the price action, it has been contained between the 59 and 70K level, okay? Every time price has broken below this key swing low here at coming up, all right, call it 56, give or take, we've managed to find acceptance back inside, okay? Now, how many more times is it going to take for Bitcoin to eventually gravitate to the upside, which is the scenario that I'm leaning towards, okay? So from a contextual perspective, I'm not aggressively looking for shorts. I'm continuing to remain contextually looking for longs. Is that clear? Yes, we are ranging. Yes, we are descending, but the degree of descent isn't all that aggressive if you really think about it. And if you think of continuation patterns, here's an example for you to contemplate, okay? When you see something like this, okay, price trends down, and what does it do? It goes into a corrective pattern. Now, for those of you who remember this, I fully remember trading this because many people assume that this was the range-bound environment, okay? And the setup that I had, it's actually on the timeline. Bitcoin was trading around about here, and I clearly said that, look, my expectations are for Bitcoin to trade up, take out these highs, the majority will probably get bullish because this is a break in market structure, and therefore their expectation is higher. My expectation was the minute this gets back inside, it's going to sell off, and that's essentially what happened. We traded back to the lows. So you would think that this is a series of higher highs, higher lows, higher highs. Therefore, you'd think this is bullish, and therefore you'd think, yeah, we're going to go back to, pretty much closer or push up towards all-time highs. It clearly wasn't the case. So contextually, this was a corrective pattern from January, February, March, April, May, right? Before it broke down. A good 4 or 5 months there. Equally, when you think of this structure here, I don't see how this is any different to what we've had in this respect. Okay, so again, looking for that corrective consolidation that isn't turning out to break into a distribution range, which suggests that we're going to get marked down because clearly there's no momentum to the downside. So I don't know where or why the calls of distribution were being flagged up on the timeline. But again, it's not unexpected when you see price trading one side of the extreme, and then eventually you'd expect it to go to the other side of the extreme where you'll find mass euphoria. The whole point is just to be objective. And when you see these extreme sell-offs matched by liquidations, shorts piling in, the delta showing you the data, quite often it provides you with a very good long setup. Equally, when you see aggressive longs opening at the highs being absorbed, okay, we'll touch upon delta in a couple of weeks' time. I just want to give you the contextual aspects of price. When you see aggressive longs piling in at this level, open interest really spiking higher, okay, but price is unable to push above the range, there's a good chance that all these participants who are trying to force or trade the breakout, anticipate the breakout, will get trapped, and the minute they get trapped, they're going to close out their positions once they're offside, and price quickly reverts back to a mean reversion or back to the mid-range or whatever, okay? That's just the nature of how markets work in a range. The chances of you catching a breakout trade from a range are fairly low. I don't know what the percentage ratio is, but quite often price trades above the range, gets people trapped, reverts back to the mid-range, okay? We only have a clear definition once we find some level of acceptance above the range high. and you see continuation, or there's large enough volume, you're going to see shorts get absolutely annihilated in terms of liquidations. Longs are piling in. Price will not fuck about. It will continue pushing higher. Then you might get a shallow pullback before you see continuation higher after a good 6-7 month period. But we're still quite some time away from that. So I'm just trying to give you the context in thinking ahead of time and what generally happens at the range highs and the range lows and how the sentiment shifts. Okay. Right, let's take it back. Now, the other part that I want to focus on in this today's session is, let's look at the trend scanner, which is a 1225. I've always been calling it the 1221 incorrectly. It's a 1225. When you look at this, okay, if my concern here, I did have some concern that if we take price back to where we were the previous Sunday, okay, this is kind of where we were at, but under no circumstance or condition did I ever state that, hey, I'm bearish, I think it's time to get out of the market. My objective was very clear. As long as we respect this key demand zone, right, which you can clearly see evident by this weekly time, this was the consolidation which caused price to rally higher. Price retests this level, comes back, gives a rounded retest on the daily. Okay, there's your rounded retest. That for me was for buying, okay? The minute we found acceptance back above 54K, that was the level to buy. Looking for price to push back up to 61, 62 into the bands. That's where I've taken profit last week, or earlier in the week, I should say. Right? Again, where did this was the previous week, on the previous Sunday, or whenever it was. Rolling it forward, I started taking profit into 61K, and I stayed flat until after FOMC. So now what's interesting is, as per the example that I gave, is that if this is bullish, you want to see price find acceptance back above the bands. You don't want to see the weekly bands give a death cross. This was another example very similarly that we saw in October 2023. You can see the bands pinching, literally about to death cross. But what does price do? Consolidates under the bands. And this is what's important, is when you're using moving averages, pay very close attention to this one concept. Don't look at the bands from a single point of view and think, oh, there's a chance of a death cross. Look at the context of price. Is price actually a fair distance away from the bands? Or is price actually compressing and trading underneath the bands? And like I said, when price is trading close to the bands, despite the bands compressing, there's always that possibility that it can pop to the upside. And when it does, you don't want to be fading that momentum, okay? So just something to bear in mind. And I gave an example of this on the timeline earlier in the week before this even happened is, again, when you look at equities, right, ES, SPX, we were so close to a death cross on the 1225. I've put 1221 here. It should be the 1225. But price is very short-lived. Okay, and once it makes that impulse back above, you really want to be questioning whether you want to short the market, or is it perhaps easier to buy the pullback into the bands and just go with the momentum to the upside. Okay, again, this is a corrective pattern. It could have been very easily assumed to be a bearish pattern because there's a break in structure, there's a lower high, there's a lower low. You'd think, okay, if this is a lower high and rejects and the bands cross over, then you've got more weight to start looking for shorts. The fact that this is now reclaimed above that 43.50 level should really make you realize the fact that, hang on a minute, price has just reclaimed a key level. There's a real likelihood of trend continuation here, unless you get something like this, a deviation or an over and under of the bands. Then you can say with conviction, hang on a minute, this isn't great. This is not what you expected. You really wanted to see the level hold. The minute it gets back under the bands, you've got your invalidation at highs. Now you can really start looking for the shorts with a certain greater degree of confidence and conviction, okay? Now, when you go back to the Bitcoin chart, again, you've got to ask yourself, right, okay, yes, price is coming into a level of resistance at 65K, right? There's no denying that. Could this be the move which either we reject from this level, therefore it's a continuation of lower high, lower high, lower high, another lower high, and another one. But then what's key for me is, are we likely to respect the 12 and the 25 moving average into what could potentially provide a very good buying opportunity? So the key level from a high time frame context is that 60K level. And again, when you draw the line across the chart, it's that key range level, okay? Where majority of the price action is traded, with this being somewhat of a shakeout, where I'm sure many people have cut their positions or been led to shakeout, or there's fear that we're going to go to 30K. But what do we see price doing? Finding acceptance back inside that key 60K level. All right. So just something to think about, that key 60K level. That's where the 12-25 bands are. If we see a corrective move down from 65 back into that 61, 60K level, that's the level that you want to see hold on for price to start pushing away from that level, to really start entertaining longs again, should we get the pullback. Okay? Is that clear? It's not a case of what's more accurate. It doesn't matter if you use a 12.21, 12.25, you know, the subtle differences. It's the context of price. I'm not looking at the 12.21 to give me a perfect, or the 12.25 to give me a perfect inflection point. It's an inflection point of probability. It's a data point that I can take into consideration such that I can then decide what's my next action. What am I likely to do next? I'm being reactive to what price is telling me. I'm not using the moving averages like, all right, if it comes back into here, I'm just going to buy, but until it doesn't do that, I'm just going to sit on my hands. No, that's not the way to trade. You just have to be prepared for that scenario. If price comes into the bands, ideally you want to see it hold. It doesn't have to. If it gets below the bands, which is in this instance, although I've earmarked 60K as that key level, for me the clear invalidation is such that, all right, look, I've already given you 2 points of confluence here, this 59K level, 60K level. You then have to ask yourself, look, with the bands pinching at this level, okay, my expectancy here is for continuation higher. But if this is a rejection and then trades under here, at that point, I have to be open to the idea that, well, once again, it's quite probable that we're going to trade back into the 54K level. And based upon that context, I'll have to start thinking about trade setups on the lower time frame. But the key is to get my context right in the first instance. Very simple approach. We're not looking at open interest. We're not looking at funding. We're not looking at all the other shit that gets tarted on Twitter. Price action is king. This is going to show you your structure. This is going to help you make you understand the levels where you wish to trade. Get this right. Get your principles right first. Then if you want to bring in all the other points of data which adds confluence, go ahead and do so, okay? But most of my trading decisions have been purely based upon price action, understanding raw price action with volume to make a decision, then going on the lower time frames, looking at liquidations, looking at open interest, and looking at the delta to see where participants are positioned. Are shorts getting aggressive into the lows? Are longs getting aggressive into the highs? If they are, I want to start taking profit or hedge with a short for any long exposure that I have. And again, if you don't understand those points, we will start touching upon them. Just for the first few videos, I wanted to just give a real primer on how I think about price action, really slow down. I'm looking for 1 or 2 trades a week max on Bitcoin. If I don't get one, that's fine, okay? That's absolutely fine. But for now, we are still within this rotational range-bound environment, and that's all there is to it, really. How much of your decision? So there's a question: how much of your decision making on the high time frame is based on data versus discretion? Well, it's all discretion. The data is basically okay. There's 2 ways to think about. All right, how I think about markets is understanding, first of all, the levels I want to trade. Okay, once I understand the levels that I wish to trade, Then I look for price and data points on the lower time frame, and that's where trade execution comes in. Okay, that's where I have a completely different set of rules. That now that price is trading in this zone, how am I looking to execute? And that's where from the weekly I will drop to the 1 hour and have a look at what the 1 hour chart is telling me, looking for a potential trigger point. In this instance, I can't remember where it was. It was this zone here. This was the 4 hour demand zone that I wanted to see price initially hold. Okay, I wanted to bid this, but the fact that we just ripped through this level wasn't a trigger for me. But I remember on stream that I think it was last Sunday, we're around about here, this 54k level, and I clearly stated, I think I marked something out like, what was it? It was probably something along the lines of, you can go back and check the stream. It was something along the lines of, look, if I'm going to get long on this, knowing that this is into that key yearly mid-level or key demand zone, for me, the level that has to hold now is this here. Any retests, okay, of this level and push back above, this is now my invalidation point. I don't mind price retesting this, but we're back inside that key demand zone. We're back inside the range. There's my swing high to the left. Range low, range high. That was the deviation above it, which caused price to come back to the 4 hour demand zone, which failed to hold. We got the extended sell-off, shorts piling in at the lows. That was good enough for me. Okay, liquidations, shorts piling in at the lows. Sellers unable to push the market. They got trapped. Price unwinds back to the highs, back to that key level again, okay? That key pivotal point, which is 62.8 or 62.9. Call it, give or take, 63k, all right? So that's the context that we spoke about. That why are we looking for shorts when price has been selling off for the last week or so? That was on the previous stream. And my objective was that 62k level into the 12.25 moving averages, essentially where I've taken profit. What do I think about the yield curve coming out of inversion? We'll discuss that on Sunday's stream. I just want to talk about price action basics. Now, moving forward, look, the range that I'm looking to play now, I'm just going to talk about trade setups here. We've been on stream for literally 25 minutes. Time flies, right? But essentially, this is the range for me. Look, this is all I'm looking to trade. I'm not even discussing, I've never once on the timeline mentioned distribution or I think the top is in. I just think it's pointless. I find that too many people are just trying to be heroes in terms of calling a top when there's no real clear signs of it being a top, especially when you've got equities and NASDAQ rallying higher. To me, there's no indications or signs of that this is a top or that this is bearish, in terms of the next several months. We're in a range. That's all there is to it. We can't seem to find acceptance below this key level. And until we do, or until we can't, then it's very, very simple. Price comes into the range lows. I'm looking for longs. Give me a pullback into this level here. I'll look for another long. Okay, so again, taking the mid of this range now. All right, we're just in that key zone. Now, the key point here is that, yes, this is still a lower high, but I think it's probably well documented now on Twitter that, we're looking for a break in structure, possibly a swing high into a higher low. I think that could give a very good trade setup before we see continuation higher, okay? That's one possibility. The second possibility is that we may not even print a new higher high compared to the previous swing. At that point, so again, I think if something like this did play out, the question then arises, Exo, would you be looking to short this? I'm not sure. It depends, okay? If I see longs piling in at this level and shorts getting squeezed out, and then longs get trapped, but there's no continuation momentum, there's large spikes of volume opening up in here, but price is unable to push further, then yeah, I may just take a short-term trade back into that 60, 61, 62k level, okay? I may do. But it's not a high priority trade for me. I think what makes a more logical setup for me is that let's just assume price cannot trade up into here. Okay, what do we do then? Is the crowd now going to turn bearish in the assumption that, oh no, Bitcoin's printed another lower high? Are we going to go even lower down? Which you probably will see some scenarios. But for me, it's a case of, look, if you take the weekly low, which is Tuesday, and price was at that 57K level, look, any pullbacks into here, for me, and again, if you look at where that is, where did price react from? Back in March, 1, 2, 3, 4, 5 before it traded under, back above, retested this level and pushed up higher, okay? And again, it's contained within the earlier range that I talked about, that 60K level. That's where your moving averages are, that 60, 61K level. This is a key pivotal point where price has tested this level. It's had short-lived price action below it before it pushes up higher. And again, okay? So any pullbacks now for me into this level, assuming that we can't take out this high, and we get a reaction, that's going to be the long stop just below Tuesday's low. I'm looking for price then to push up into that 68, 70K level, okay? That's one scenario. The other scenario, and again, if this happens, I'm not looking to short this. This is upon the condition that we just drift back lower down into this level, give a consolidation. I'd want to see this low hold. I don't mind price taking out Tuesday's low and closing back above that key pivotal 60K level or back above the bands. If it does that, then that's going to be a trigger for me to go long, looking for higher prices, at least into 69, 70K. I am leaning towards the possibility that the price does eventually come back and clean out these highs here. You can see where Bitcoin, it was being capped at this level. It never really took out this high. I think if we do start pushing above the mid-level upon a correction, that increases the probability for me to start trading the upper bound of the range and eventually tagging at least these set of highs. That's what I would be looking for anyway, okay? But subjective to data, subjecting to trade setups as and when they come to fruition, all right? So that's a pullback scenario. This is the pullback zone that I'm looking for. I really wouldn't be contemplating shorts. I think the most obvious short for me, or the point in terms of having some concern in the sense where, all right, I think we're going to go through a much larger, I wouldn't say larger, but perhaps another window of correctiveness in the market is if we do lose that 59K level, then I think at that point, if we get under here and price cannot seem to find acceptance back over there, then you're probably thinking to yourself, all right, we could just tap back into this zone here and then we'll see where we are, okay? But again, not something that I'll be looking to trade. I want to remain positioned looking for longs. Given the macro outlook, the macro context, are we heading into a phase of Goldilocks? Growth is holding up relatively well. The Fed has cut 50 basis points. Markets have held up fairly well. There's still a lot of data to be processed. And I think we'll have a much clearer picture next week. So again, why I probably will have a stream on Sunday. Heading into tomorrow, there's not really a great deal of action that I'll be looking to take, I've had one trade today, which was a breakout above from, over the last day, which was from 62 to literally 63.5, which was that mid-level where I've taken profit now, okay? I'm not too fussed if price pushes back above here. If it does, all right, let's just talk about a scenario that I haven't covered, which is if price does push above significantly higher, then I'm looking for that pullback into the mid, maybe trades below. But as long as price can hold that mid-range level, then I'll probably start thinking about taking longs to the range highs off the mid. Okay, so that's two long scenarios that I'm looking for if and when they do set up. And hopefully that should cover the long scenarios that I'm looking for. I'm not really looking to entertain shorts. No chance. Okay, not after the fact that we've tested this once, twice, 3 times. If I see a real structural weakness, then maybe I'll start thinking about shorts. And if there, like I said, if there is a short that I'm probably going to take as a quick trade, if I've got conviction behind it, if the data tells me, yep, a lot of longs are trapped up here, it's going to be that spike up into here and a quick reversion back into that 61, 62K level. But again, that's just more on my day trading, short-term intraday trading account, okay? I'm still going to maintain some of my spot exposure on Bitcoin and just continue looking to hold that for as long as we hold that 52K level. All right, a quick question about the old live streams. I need to update them. I need to update all the disclaimers. So just a word of warning. When I republish the old live streams, you will get notified that I've released videos, but they're actually old videos. So I just want to give a heads up on that, okay? Right, in terms of altcoins, we'll just quickly touch upon altcoins. Again, I think I'm going to save that for Sunday, but altcoins do look very, very promising. And let's just look at one or two altcoins and we'll take it from there. But when you see these types of structures, right? When you look at the monthly time frame, you've had 1, 2, 3, 4, 5, 6 months of selling into a monthly demand zone, okay? Into what is almost a doji candle. Taking out the previous July low. My question to you is, why would you even be thinking about shorts? Take them off the table. There's no need to short this market at this point in time. And if you are shorting, then you've got to question your contextual bias. Why are you shorting after price has been down, trending down for 6 months? And there's clear signs of exhaustion. Where are the signs? If you look at this on a monthly perspective, right? Purely from a price action perspective, what is this? What is this? And what is this? Look at the size of the wicks, okay? Sellers are unable to push the market higher. Passive buyers are absorbing price, okay? Key thing to pay attention to. And you can, in fact, take a step back and look at Bitcoin. Do you or do you not see these wicks? Okay? And I've touched upon this on previous streams. Look at this. Rejection. Rejection. Sellers stepping into the market, okay? Buyers stepping into the market, pushing price higher. Buyers stepping into the market, pushing price higher. What's happening here? Subtleties of price action which you should be paying attention to help you understand, based upon the higher time frame, what's happening in terms of price context. So when you look at altcoins, after months of selling or slow bleed lower down, we've finally seen some form of wicks appearing in the chart. Now look at the weekly. This is a downtrend. Is this now a downtrend? Or are we now forming the parts of a range? Then you can go on the daily. Again, look at the time and price of the chart. We've been at these lows since July, August, September. 2 months of price action going sideways in a range-bound environment. Look at the size of the candle bodies at the lows. Very, very small candle bodies. Lack of volume, lack of sellers now in the market. Okay? For markets to go higher, there's got to be a lack of selling participants. Okay? And eventually, price finds a nice balance of supply meets demand. Okay? An equilibrium point. Doesn't matter about inverse head and shoulders. You know, just pay context to what price is telling you here. Now, based upon these types of structures, you then have to ask yourself, all right, when you think of market cycles, when you think of alt cycles, do you really want to be entertaining shorts at these local range highs just so you can trade price a few ticks lower down? Or does it make more sense to wait or start positioning, right? And I covered this on a tweet earlier, that there's two ways I look to play the market. One is from a spot positional perspective. That's such that when price has come off a trend, prints a high, prints a low, prints another high, we start developing a range. This is no longer a trending market. I want to start positioning from a spot perspective into some exposure, okay? Just slowly dollar cost averaging in. I'm not looking to DCA on the way down. I'm looking to DCA in a sideways range-bound environment, knowing that I have a clear invalidation point, knowing that I'm not catching a knife. Now, from a futures perspective, I want to be trading momentum to the upside. When price starts breaking out of this range, this is when I'll start deploying my futures capital into trades, looking for that momentum trade higher. Knowing that my invalidation is, should price fail to break out, it's going to fall back in the range. I've got to look at the trade. So now I'm letting my spot positions run, okay? And I'm also trading my futures account, looking for maximum gains in the least amount of time, at least into this key mid-level here. That's how I'm looking to play the higher time frame. I'm just using this one chart as an example. And that's how I differentiate between playing spots. And for those of you who wish to play futures, right, but you're pissing away your capital on funding because you've probably bought in here and you sat in that position for 30, 40, 50 days, churning out your account through funding, well, maybe switch over to spot and then look for the momentum trade in terms of futures, all right? Your futures account, you're looking for those quick, fast momentum plays. Your spot account, you can sleep well overnight. You're not going to get liquidated. You're looking to build a position in a range-bound environment. Eventually, you're looking to trade, or in terms of futures trading, the tail side of that accumulation range. That's all there is to it. Now, if you want to add context to that, again, you can use the trend scanners. I think that it's such a great tool for simplification. And again, can anybody remember what I've preached in the past, that when you apply moving averages, don't just look at price or the moving averages blindly. Oh, look, there's a bear cross, there's a bull cross. What you want to see in an accumulation range is the bands. Look at the trajectory. It's going sideways. Okay, point number one. Number two is the bands are getting chopped at the highs, then the lows, at the highs, then the lows. This should help you understand that the context has shifted from a trend down into an accumulation range. Why are you looking for shorts when you should start thinking about looking for longs? Unless you believe this is redistribution, which I find hard to believe after a 70-80% retracement. The context now is very simple for me. I'm looking for longs, okay? I'm looking for positional plays. And then when price eventually starts breaking out the range, I'm not FOMOing into spot positions because I'm already trying to build a position around here, which I am. I'm looking to then let my spot relax. Once it breaks out, I can breathe because I've dollar cost averaged around at this level and price starts pushing higher. I'm comfortable in my spot plays. Now I can think about trading the market from a futures perspective and looking to maximize on the trend on the way up. Okay? Does that make sense? And you can keep it very, very simple, extremely simple. You'll probably see many people using, how I would do it is just literally a few lines and just understanding what price structures I need to see. And look, again, when you look at price structures, right, how many taps of this demand zone, this was the origin for price to go to new all-time highs, was it not? Look at the origin, which caused price to trend significantly higher. It wasn't just drifting, it was trending higher, okay? And again, when you look at the inflection points, 1, 2, 3, 4 taps into this zone, okay? Buyers stepping into the market. So any pullbacks, any shallow pullbacks, I'm going to keep adding to my say position. And again, using the high time frame levels, range highs, mid-range, I'm looking to target that. How that plays out, I'm not sure, but I'm just being speculative. I don't have no magic wand, but I'm looking to play the probabilities. If I'm wrong on this, that's fine. I know my invalidation is at 26. If it trades below, I have to cut the trade for a loss. Get back above the level. I step back into building a position. Hopefully then we'll see the push up into that 60 cents level. Okay? Bro, just say it. Gig along now. Bull run has begun with rate cuts. Yeah, of course. I mean, look, of course I want to be, super mega bullish, but objectively, it's not me. Okay, if you want hopium and people just telling you long the market, everything's bullish, Q4 is going to be great, and I hope it is, and I hope it will be. I'd rather remain level-headed. When I'm trading size, I'm not going to be an absolute turd and just say, "Yep, time to go all in, just fucking full port into some shit coins," and then just neglect my risk management. That's not how you survive in this game. I've survived for 7-8 years. I'm heading towards my 9th year of trading. So risk management is what saves my ass. All it takes is one bad, overly sized position to wipe out my account, and I'm never going to let that happen. Okay, I will take calculated risks, and I will not hesitate to cut my position if it means waiting for a better probable setup. If this is going to come back on me, I won't fuck around, mind my language. I'll wait for a clearer defined setup. Maybe this prints a longer rounded bottom before I can see upside. But that doesn't necessarily mean I'm going to start looking for shorts. You know, look, adverse scenario. All right, maybe this is a failed breakout. Maybe this isn't quite the time for markets to rally. Maybe we'll rally after the elections. Who knows, right? But I'm just speculating. I'm taking on risk. I want the exposure. I'm pleased the fact that we've got this opportunity to start getting exposure at these lows. Up here, I was not interested. I was not interested in buying spot or having exposure to altcoins. Down here, now that the sentiment is crushed and people are crying because they're 70-80% down on their bloody shitcoins, well, you've only got yourself to blame for that, okay? But for those of you who've been patient in cash, looking for opportunities, I think this is one of those times where over the next 2-3 months heading into Q4, you'd like to think this does perform well, okay? And again, just keep it really simple. You can use a set of moving averages. Drop down onto the 12-hour. Eventually, this will cascade to the upside, and that's when you're going to see your shift in momentum, just like this. That's what you want to see. Trajectory of the bands, volume picking up, price candles expanding. That's your momentum to go up, okay? What you're seeing here is, in my opinion, seller exhaustion. Sellers are unable to push the market lower down. You also have to think about the fact that if volume has been low for again, key point, just pay very, very close attention to this. And if you can remember this, I think you'll do well in your trading career. When price has been selling off for several months, right? Participants have a lack of, they're disinterested. They're not interested in altcoins. They've given up hope. Price is down 70%. When is this shit going to turn around, okay? Clearly, they're not looking to buy because they're back holding. Number two, whoever's puked, whoever has sold is pretty much sold out. Number three, when volume is low, the books are very, very thin. So when the books are very, very thin, what do you think happens? Now, I bet many of you are looking at this and are hesitating to buy, right? Which I understand. You've probably been hesitant. Should I buy? Should I not? Should I buy? Should I not? Right? And volume is very, very low. But the books are very, very thin as well. And it's not going to take much for price to print a candle like this, which if you look back at any previous cycles or altcoin seasons, you always get that strong impulsive first candle, which literally wipes out what? It wipes out weeks and weeks and weeks of selling in one or two candles. Now you've got FOMO. Now you want to start chasing price. And on the other hand, some people, what do? Oh, look, price is at the range highs. Let me short the first impulsive move out of this range. And they haven't paid any attention to what the context is telling them. There's a chance they may get it right and it could fade back inside the range. Fine. But the chances are I'd much rather be that person who's looking to buy this, knowing that this structure is playing out into an uptrend in the market. Okay? The risk with shorting an impulsive move like this is if you're on the wrong side of that and the books are very, very thin and now the crowd is piling in, well, price is going to push even higher. Shorts are going to puke, therefore pushing price even higher. And that's how you often get these fast, aggressive moves up. It's not just buyers piling in. The books are very thin. The supply side is very thin. Shorts are also opening and they're getting absolutely fucking rattled out of their position, which causes price to go higher. Understand how markets work under the hood, especially altcoins, when the volume isn't that high and the books are very, very thin. You're playing a very dangerous game if you're trying to short the market from this positional context. That's just my opinion. I could be wrong, but I've been around long enough to understand how to trade altcoins. Okay? Yeah, Saga's a great structure. I think if you pay attention to Saga Dime, we've been talking about these J curves. Eventually, it's starting to pay out again. If you look at where the bottom is, July, August, a higher low in September, look at that. This is what you want to be playing. You will probably see this type of structure start printing on other altcoins, okay? Saga has been one of the first to move. Look at this from 80, 90 cents off the lows. You've got a double bottom. It's now at $2.50. That's a 2x straight away under the radar. Same with Dime. Okay, Dime, Saga were coins that I talked about that I'm looking to position into. Again, lovely structure, right? You've got this price trending down. Look at the moving averages. It's compressing. It's going sideways. This is that contextual shift that I've been talking about. This is now where you want to start thinking about accumulating a position. For those of you who are interested in DAI, I'm not saying go out there and buy it. Okay, and then you're looking for that shift in market structure. You're looking for higher highs, higher lows, the bands trending up, and now you've got that new wave of cycle pushing higher, okay? However high it goes, but that is value of opportunity in terms of trading price to the upside and capturing some of those gains to the upside. Hey, Grant, how you doing, my brother? Hope you're well. So there's no way, right, that... Simply put, this is opportunity. I don't know what else to say to you. You've waited for this. We've been bleeding for 6 months, and I don't understand what the pessimism or what the fear is about. And I've said it on the timeline. I've been advocating for the fact that in terms of macro structures, this is the shit that I live for. This is exactly what I live for when it comes to trading alts. Give me this every single time, and these are some of the best structural setups that you can speculate on. Where the price goes high is up to the market, but I want to speculate on these types of structures, okay? Possibly another one is wormhole, but I'd have to look at the supply distribution. I don't know what the distribution is like or the token emissions, but again, another one hovering, the lows are at 17, 18 cents. This is at 22, 23 cents. There's so many alts like this on centralized exchanges, on dexes, that you can look at and play. Yes, meme coins are doing well once again, but eventually I do believe that if Bitcoin does push up to the range highs, altcoins will hopefully follow suit. Last chart I'm going to look at is total 3. I'm not even going to bother looking at Ethereum at this point. But when you look at total 3, when you look at this, and the fact that, again, the bounds are compressing, but if you look at price, the difference, okay, between distribution and the market being in a bear trend and me being a perma bear is when you have a clearly defined breaking structure, a deviation above the bands. Now it's time to short the market, okay? All the way down. The fact that you've even got a swing high deviation, that was an easy trade down into this range. At this point, I don't know if this is going to trend down. It could very well continue going higher in 2 or 3 drives. Pattern 1, 2, 3, right? What gives it confirmation that this is a bear market is you've got the 1225 weekly death cross. You've got acceptance above the level, but look what happened. It's short-lived. Once it gets under the bands, under this key SR level, there's your trigger to short. Absolutely floor it to the next logical support level. Close your trade, okay? Now, when you look across the line, why is this different? Well, first of all, we've been going sideways or drifting lower for 6 months. That's your highs in April, March, okay? We're now heading into October, Q4. Secondly, price has been holding up as support here. We've already had one instance of price trading above the 12 and the 21. It's had 3 tests of support, very similar to Bitcoin. Why are you looking to short altcoins when there's a very good chance that if this does break out of this trend line and above the 1225 weekly EMAs into Q4, surely the probability weighs to the upside versus the downside. Keyword probability. Then if you look at the stock, RSI, which is one of my favorite indicators, in terms of timing momentum, covered this numerous times on stream. The fact that the stock RSI was in oversold territory for 6 months, and yet all price could do is retrace 40, 50%, that to me, from past experience, is indicative of a corrective move as opposed to a distributive move, okay? Yes, altcoins across the board have gone down 60, 70, 80%, but the point I'm trying to make is structurally, this looks okay. It's pulled back into a level of efficiency, into what was a logical level of support. Consolidation, price rallied higher. slow drift down into that level, can't break through it. Weekly stock RSI is now at the lows, looking to turn back up. Momentum is starting to pick up across markets. You really want to start thinking about trading momentum to the upside for as long as this key level holds. Okay, and that's why I'm excited heading into Q4. If that things can come, if the market does come into fruition, like I anticipate, like I hope, I just don't see the point in really looking for short opportunities when I think the upside and the risk reward favors upside risk and gaining exposure, building positions for that opportunity over the coming weeks. Now, the caveat to all of this is that Bitcoin is heading into a level of resistance at 65, at 66K. Should Bitcoin give a pullback to 62K, then altcoins will give a pullback. As long as Bitcoin holds at 1225 or 1221 EMA, I'd like the idea of positioning or increasing exposure next week or the next week or two into altcoins from a spot perspective. I'll have my futures account ready to start latching onto the momentum plays, okay? But that's it for today's stream. I've probably, well, wow, it's been 1 hour. Time flies. But I'm just trying to really keep it very simple in terms of pure price action, thinking about markets from a contextual perspective. We can touch upon all the fancy indicators and open interest and delta and order flow and watching the tape in later streams. But I just want you to understand that look at the opportunity, the potential opportunity ahead of you, okay? That's my key point here. And that's the key point of today's stream, that there's no need to be fearful in the markets. Remove your emotional bias. Think logically from a risk to reward perspective and look at what's ahead of you in terms of price, okay? That's all from me. Have a great Friday and a weekend, and hopefully I'll catch you guys possibly Sunday evening with more of a macro outlook on Bitcoin trade setups. But like I said, I think over the next day or so, I probably won't be trading much. Going to be taking it easy. And like I said, Bitcoin's coming into an area of contention of slight level of resistance. Nothing that concerns me. You have to remember, we've moved off 52 into 64, potentially 65. And yeah, we could squeeze higher if people are trying to short this too early. Might just push up higher before we then get a correction. But I think it's that corrective move then where you've got to start thinking about, all right, which altcoins have shown strength? And is Bitcoin going to respect that key level of 59 to 60K? And in doing so, if it does give you that pullback, I think without hesitating, I will be looking for continuation longs to the range highs, okay? That's all from me. God bless. I hope you have a great weekend ahead. And I'll catch you on Sunday or Monday. Take care.